Welcome everybody. Welcome to another episode of S&M Trading's video tutorials. This is going to be another beginners series. Today we'll be going over different types of orders. And we're going to go ahead and start with instant execution. Okay. When you open up your MT4 and you want to place a trade, then there are different types of orders. We'll be going over instant execution, buy stops, sell stops, buy limits, and sell limits. So first up is going to be instant execution. So say we're looking for a trade on EA, Euro AUD, up here, right here on the 15-minute, and you're waiting for price to get past your level right here. As we can see, we can mark out this level right here. We have just come off a really strong uptrend. You're watching your chart. You're anticipating that price is going to break this level. So let's just say you're waiting for that. If you're expecting price to do something like this, break through this level, maybe wait for a retest, and then go up, and you want to place an order here, then as soon as price is coming up to this level, you're going to be placed into the trade. Okay, so let's just demonstrate that real quick. And it's pretty much going to be the same for a buy stop. But let's just say that you're placing your target all the way up here, and then your stop loss can be below these previous levels. So now you're waiting. You're waiting, you're watching your chart, you're setting your alarm, whatever you have to do to notify you that when price comes up here, to check your chart and place your trade. So as soon as price reaches this level, once again, coming down. Soon as price went past this level right here, you saw it, you set your alarm, boom, you got into the trade. So that's pretty much instant execution. Easy stuff. Let's go ahead and go on to the next one. All right, guys, here we're talking about buy stops. Buy stop, by definition, will put you into the market at a predetermined price point, okay? So let's say that you are analyzing your chart. We're looking at silver right now on the hour chart, and you're expecting silver to keep going up after this bounce off of 26.79, and you're expecting silver to shoot past this area right here at about 27.478, this zone. So you put in your criteria in MT4. Here's your buy and sell area right here, or your take profit and stop loss. All right. And you're expecting price to come past this area. So once price starts coming past this area, if you already put your order in at this point right here, and we can make this red. Actually, no, we'll make it green. Okay, and thicken it up just a little bit, just to represent where your buy stop order is placed. Once price comes past this point, you can either be in front of your computer, away from your computer, away from MT4, whatever. As long as you have this price point as a buy stop in MT4, then once price reaches this and passes this, you will automatically be placed into the trade. You don't have to do anything. Like I said, you can be away from everything, and your order will be placed for you. So this is an excellent way to enter into the market after you've already done your analysis and you're waiting for price to reach past a certain point. So as soon as price reaches this area right there, you're placed into the trade. Okay, price reached and passed that area because you're expecting price to keep coming up. So you're in the trade right now, you're in a negative because you wanted price, or you wanted the market to put you into this position as soon as price crossed this point. Okay, so price came back down and now you're in a negative. So as price continues, now you're in a positive. You've already been entered into the trade. Your trade is actively running at this point, and you've hit your TP. As soon as price came above here, you hit your TP. It's an excellent trade. You were waiting for the market to reach past this point to enter you into the trade. You were in the negative for a little bit once it came back down, and you ended up positive, winning that trade. This all could have happened while you were away from MT4 or your computer. Okay, didn't even have to watch it. So this is sort of like an auto trade type feature that you can initiate within MT4. As long as you have your analysis correct, your break, retest, come down. When you saw price going up at this point, decided if price shoots past this area that you wanted to be entered into the trade, it happened, hit your TP, boom, great trade. So on to the next one. All right, guys, here we are at AJ, okay? And we're gonna go ahead and go over our buy limit. So buy limit, pretty simple, okay? Let's say we're doing our analysis. We marked out these two zones right here, okay? And we're waiting for price to come back up. Say we've seen AJ drop below this zone, and we start seeing these wicks coming up on the hour time frame. So now we're expecting price to come past 77.100. So we've seen this dropping. We've seen all this dropping. Actually, let me stop. I gotta do this over. All right, guys. So buy stops. Okay. Buy stop is pretty simple. We'll go ahead and mark this out just like this. All right. We'll have a green since it's a buy. And I'll go down here and show you in the charts as well. Buy stop is simple. Price is falling. Just like over here, price is falling, falling, falling. This arrow will represent price. If price is falling, and at some point we're expecting price to come back up as well, then this point right here can represent our entry point that we're looking for price to go past and then come back up. That would be our buy limit. So for our buy limit, price has to be above your buy limit before you're able to either enter it or put it into MT4. Price has to be above the price point that you want to enter the trade in or enter the trade at in order for MT4 to allow you to even place a buy limit in the first place. Okay, so price has to be above your price point because you're expecting price to come down below your price point. As soon as price starts coming back up, triggering your price point, this is where you're entering the trade. This is where the market will enter you into the trade. This is called a buy limit. So let's just recap that. In order for you to be placed in a valid buy limit, price has to be above your entry price. Price has to then come down past your entry price then come back up, entering you into the trade here. This is your entry on a buy limit. So let's look at that into the market. And we'll go ahead and use our replay feature to demonstrate this. We see what's happening right now. We already seen this. So let's just place our replay bar right here so you can see how this is working out. We already know it goes back up, but I'm going to show you where in the market you were entered into the trade. So let's move our entry point down to here. We are expecting price to come past your entry point and then come back up, triggering you into the trade here. That's what we're waiting for. So you can place this now because price is above your entry point. As price plays out, we know it drops below your entry point, then comes back up into your entry point and past it. On this bearish candle is where you are entered into the trade because you already had your entry point placed when price was up here. We are expecting price to come down in the example that we said before. We're expecting price to come down and then come back up, which is exactly what happened on that come up when price passed your entry point on the way up. This is where you were entered into the trade. So this is a buy limit, guys. Okay, guys, let's go ahead and go over sell limits. Okay. As you can figure, sell limit is pretty much the opposite of a buy limit. Okay. So let's illustrate it up top first. We'll go ahead and mark this out up here. We'll make our line red to illustrate our sell. So since we're doing the opposite of a buy limit, for a sell limit, price has to be below your desired entry price. Okay, price has to be approaching your entry price. So if you're anticipating for the market to come up into this point and then turn around, then yes, you can set your sell limit right here, but price, which is USD MXN, has to be below that entry point. Okay, or MT4 won't let you input this sell limit if price was above here. Okay, if this is price coming down into this, this would be a sell stop. That's for the next video. We're going to go over that in a few. Right now, we're going over sell limits. So as price is approaching here, like I said, opposite of the buy limit, price passes your entry price, and then price were to start coming down right at this point, right here. This is where your sell limit will activate an MT4 and you'll be placed into the trade. Okay, so like I said, opposite of the buy limit, go ahead and illustrate that with price right now. So bring this down. Here is your sell limit. Okay, as we see, after you have your markup, you're in a downtrend, price is coming down, making your lower lows, lower highs, lower low, lower high. In this area, okay, let's get rid of this so we can accurately see what we're looking at when we're looking at our sell limit, how to execute. We know what happens. We already see a trigger, but we want to illustrate how it looks when you are being activated into your sell limit. So, like we said before, price is coming down, making your lower lows, lower highs, all the way down, lower high, lower low. Now you're anticipating the market to come up to create another lower high at this area right here. So you place your sell limit. So you're expecting price to come up to this area, to your sell limit entry point, and then turn around and drop again. So even here, you can set your sell limit, like we said before, if price is below this sell limit and below this zone, okay? So as price is coming up, we can go ahead and play this, and we already know what happens, but just to illustrate how it looks, price is coming up, boom, you're in your sell limit right here, okay? Price came to this, to your entry point, to this zone, price passed it through this wick. As soon as it started dropping again, activated you into your sell limit, okay? And as we play it out, you're still in your sell limit, you're still in your sell limit. All of this is representing your entry, okay? Your stop, since you're in a sell limit, you're expecting to sell, your stop would be above these previous highs over here. So even with all this wicking that occurred, you were still in a really, really good position as far as the amount of pips you were away from your stop loss, okay? So you've been in the sell limit, you were coming up, coming down, coming up, coming down. You've been activated in the trade since before this first wick, okay? So you were in profit pretty much the whole time, besides when these wicks were being created up here, okay? So that is your sell limit. As you see, hit TP, all of that. So great trade. Sell limit, guys. Price must be below where your entry price or your desired entry price that you want to be activated into the trade is at. Must come above that price and then drop, okay? All right, guys, last one, sell stop, okay? This one pretty easy, okay? Opposite of a buy stop. We'll go ahead and illustrate the market going into a sell stop up here. We have our sell entry point right here. In order for you to be able to place a sell stop, price needs to be above your desired entry point in MT4, okay? So as price is coming down, you're expecting price to keep coming down through this entry point, okay? As soon as price comes down through here, you will be entered into the trade right here, okay? Pretty easy stuff. So let's go ahead and get to the chart, and we will illustrate that with the candlesticks, okay? So coming here, NZD CAD, we've broken above these areas. You've marked out your zone, and you're anticipating that price is going to keep falling down and eventually entering you into your sell stop, illustrated by this red line, okay? So as price is coming up right now, you can place this trade. You can enter a sell stop. You're anticipating price is going to come down through your entry point. As soon as it comes down, you will be entered into the trade. So as price is coming down, you're entered into the trade right here as price is playing out, okay? And as we're falling, then you're getting more in the profit, So let's go ahead and pause this. Your sell stop was entered right here, okay? Your stop was placed above these highs, and your target wherever. As long as you know that price is going to keep falling, if you entered into the trade here, then you were placed into the trade here. Okay, sell stop was activated right there. So as you're coming down, you're in the more and more profit as price is falling down. Okay, so that's sell stop, you guys. Pretty easy stuff, opposite of a buy stop. And that'll conclude it for our types of orders for beginners. Sean Benet of S&M Trading, and you guys have a good one.